Hey guys, welcome to another video. Alright, so this video is going to be about liquidity blocks. Alright, so what is a liquidity block? A liquidity block is a high or a low that is printed after running a level of liquidity. Okay, so we use them as a POI or an area to take any trades off of. Liquidity blocks are used for our entries. Alright, so for example, in this scenario, this is a bullish scenario, you'll see that, well, a liquidity block is basically the low that is printed after clearing liquidity, okay, or a liquidity point. Over here, once this liquidity level was cleared and the market printed this low, that area is basically a liquidity block. So this is basically where we look to enter the markets. And the same thing goes for the bearish scenario, right? So where, let's say the low was printed, right? So this right here would be your bearish scenario. Your build up, the clearing of liquidity, right? So as soon as this high was printed, right? So this high right here that's printed after clearing liquidity, which is right here, is your liquidity block. So the clearing of liquidity was done here. And then the high that was printed after clearing liquidity is your liquidity block area. Okay, it's your area where you would look for entries, okay? Or where you would take your entries from. What makes a liquidity block valid? In order for a liquidity block to be valid, it must include two rules, okay? Number one, it must run a level of liquidity. Number two, leave an imbalance in the market or close above or below the previous candle's high or low. So we're going to be looking at the chart and look for liquidity blocks. Okay, so the first rule is you want to see a level of liquidity getting cleared, which was done right here. Black, okay. So once this level of liquidity was cleared, right, or even this one right here. Okay, so after clearing liquidity, right, the market should leave an imbalance, or the next candle should close above or below the last candle's higher low, right? So once you see that this candle closed below, right, this whole area is your liquidity block, okay? Starting from here, and you want to include the high. So whenever the market returns, right, taps into this liquidity block, is where you can basically sell from, right? It's your area of, it's your point of interest or your area where you take your trades from, right? So you want to take a sell position from the, well, there's different ways of identifying liquidity blocks. Number one being the imbalance, right when the market comes into the imbalance. Number two is 50% of that imbalance, right? So 50% will be somewhere here. And then number three is the touch of this candle, right? So the touch of that liquidity block.